Morning. It is Thursday, October 2nd. I'm Zach Howard, and I'm back with another morning market update looking at global macro markets. Fall here, fittingly, we're in the fall colors, and we're back to fall. Bitcoin hat back to bullish trend. We'll talk about that here in a second as we look through price action in certain global assets. Let's start out though with where we left off the other day. Government shutdown in the U.S. officially here. Workers prolonged, potentially furlong, I think they call it, is the U.S. term, like in Canada, layoff. The massive amount of government workers has fallen in the U.S. from where it was back in COVID and even back to in Biden administration, but it's still, from a historical perspective, it's still a massive amount of people that work for the U.S. government. Like I say, the biggest business in the world. But from an American standpoint, it is actually probably bullish, shorter term and longer term. Cut wastage, cut spending. But look at historically government shutdowns. The S&P just chugs along thereafter, and that's what I would expect in this backdrop. If anything, the dollar is DXY continues to show lower lows. Bond yields continue to fall lower, and that's a backdrop for higher precious metals, which we'll talk about also. But let's look at the deficit spending. Why is the stock market at all-time highs? Is through the lens of debasement of currency, through the lens of spending, fiscal spending specifically, and outside of war and other extreme periods in history, the amount of deficit spending the U.S. government is running doesn't matter what side of the aisle you're on, left, right, team, red, blue. It doesn't matter. These guys are all spending money. Money that doesn't exist, is out of thin air. And that is having longer term repercussions in other markets, whether that is precious metals or other stuff, as we'll touch on here shortly. But just look at this chart. 1971, what happened in 1971? That's when all this really started to go to shit, is when the U.S. came off the gold standard and you could just print endless amounts of money for XYZ cause, XYZ war all over the world, etc. There's no govern any of this fiat system ever since, and with that, we've seen a lot of social repercussions ever since, and specifically over the last 5 years. And here in 2025, you look at the price of gold. To me, gold is saying the fiat money system is failing, and particularly the U.S. societal system is failing. At what point in gold is it officially U.S. is in a civil war? I don't know, but if you're looking for that headline to come across on CNN or Bloomberg, you're not going to find it. But if you're looking to that confirmation, to the price of gold, a $4,000 an ounce U.S. dollar per gold, I think it's a pretty telling sign that shit's not right, and something really bad is hypering underneath the surface. Let's look back through history of the Weimar Republic in Germany, heading into pre-World War II episode. The characteristics of societal norms back then and today are very similar if you want to study those time. Valuation is not a catalyst, as I keep saying, but when you have this backdrop of debasement and falling currency, markets want to go higher. When does this end? I don't know. But we are at extreme levels, no doubt about it. Whether you look at it from this chart, the S&P 500 CAPE ratio, 10-year returns, we're getting up there for where we were in the dot-com crash, 2000. If you look at it from a standpoint of S&P 500 price to sales ratio, all-time high, extreme. Doesn't mean it ends tomorrow, but when it does end, there's going to be pain. There's going to be pain felt throughout all this system that is the wealth machine. And the wealth machine of the U.S. equity markets is really an instrument of national security right now. It's just so large how much is there and keeping all this glued together and duct taped together for this fiat facade. And when it does break, eventually they come with the money printer hardcore again. That's really all roads will eventually lead to more money printing when this implodes. Looking at the S&P from a standpoint of last 12 months net income and price to earnings multiple and historical Keynesian metric to say something is overvalued or not. You look through your business book, yeah, we're screaming way overvalued here at 55.8 when you got one company, Nvidia, trades for all the fiat value of every single Canadian company combined, almost $5 trillion market cap now. Yeah, it's extreme. That's what happens when fiat dies and just valuations go crazy. And the US households are all in. They've never been more invested in the stock market. It is a product of the society. You look at my tweet I put out last night on my X account at Zach Howard. There's a couple of pages there back to the Weimar Republic of the 20s from the book When Money Dies, and it's the same dynamics. Everybody's gambling, whether it's around sports betting, you can gamble on poly markets, you can gamble on the stock market. But when people give up on actually trying to contribute to society, trying to build something, trying to work an honest job, whatever honest job is anymore, realize they can't, they take for other avenues, and that is true markets. That is true gambling. That's what's happening. Let's look at U.S. macro data yesterday. A bit of a mixed picture globally. S&P in Brazil, manufacturing less than 50 contraction territory, same with Canada, no surprise there. Canada in an official Keynesian recession, if you ask me. The U.S. side, still expansionary, and the manufacturing side above 50. The PMI manufacturing just below 50. Prices ease a little bit, so taking away from that stagflationary theme there. As a mixed picture, new orders down below 50. Not too hot, not too cold, which leads into the next stage where the debasement accelerates. We already know central banks cut. There's no rate hikes on the table anytime soon. If anything, they just stay here, but the market's pricing more cuts ahead, which means more higher assets prices. Looking at gold miners, silver miners, they've been the outstanding performance this year, and I think there's still a lot more upside. From here, look at this chart of the GDX, the gold miners. Forget your hot tech stock. Forget your crypto, your newest shitcoin chart. Look at this long-term chart of gold miners. Been left for dead, and now they actually have real businesses that are minting massive free cash flow at spot prices of gold approaching 4,000 an ounce. Some of these companies have all-in sustaining cost $1,500 an ounce, $1,400 an ounce even. They are printing massive amounts of free cash flow here at these levels. And you put that in the tailwind of falling oil prices, even more positive for the biggest, I guess, operating expense of a gold mine outside of labor is their diesel and their energy costs. So a great tailwind when you get higher spot prices and lower input costs. Doesn't happen very often in an inflationary environment, in a capital-intensive environment of gold mining. This is why they continue to shine, pardon the pun. But look at this great tweet from Javier Bases from Bloomberg Energy Reporter, talking about, if you look through the lens of oil here at $65 a barrel, in real purchasing terms, how actually discounted it is and how much of a real tailwind it could be for these miners. This over here on the left is a breakdown of the largest holdings in the GDX, which is the biggest ETF of gold miners. All the big guys, the billion-dollar companies. But if you really want to do work inside the space, and you can get to understand what gold mining is and management teams. I've been studying this management team, Mega Mining, for 7-8 years. It's one of my favorite companies I've ever come across. Even all the years I financed small businesses, looking at management teams and financial statements, I've never seen a company that's so easy to understand and diagnose, and a management team that says they're going to do what they're going to do and actually executes it over and over again, providing opportunity for shareholders to have shareholder value without diluting shareholders, which is what most mining companies do. I suggest you do your own research on a company like Mako, but I still continue to love it. They did an announcement here this week where they did another acquisition in Nevada, the prime jurisdiction for gold mining in the entire world, where they had not had to issue any debt nor issue any shares to do this acquisition. Very unique. Outside of gold and silver, it also has a tungsten deposit underneath the surface, which is very unique, where the U.S. government is now saying tungsten is on the critical metal list and they need to source supply. It's really essential for the component of defense building, anti-military shells and stuff for tanks, I think. But China controls over 80% of the global market, and they are not going to be exporting tungsten. So when you get a company such as Mako that can find a tungsten mine, you can be guaranteed that this Trump administration is going to push away red tape and let this company go explore and potentially develop this project a lot easier than they would in other jurisdictions or they would previously in the past. Mega Mining has been on an awesome run. They did another acquisition in December back in Arizona, one of the most accretive acquisitions I've ever seen in 20 years looking at deals, whether through a commercial banking perspective or an investor. They basically got an operational gold mine now here in Arizona that's going to flick on next week, fully operational in the next couple of weeks. They got it basically for free. Really intuitive. So that's 2 acquisitions in 9 months by this management team. Plus, they still have their operations in Nicaragua with super high grade open pit, minting free cash flow that's going to allow continued expansion of the company. And they got a 4 to 5 million ounce project in Guyana they're going to build over the next 2 years. So, if you're interested in gold miners, look at Mako. Into the longer term perspective of gold price, as I say, approaching that psychological level of 4,000 an ounce, still higher lows, higher highs, an all-time high, super bullish, especially in the backdrop of debasement of currencies. The gold accumulation by central banks has still not even caught up to where it was back in the 90s when they switched over from the petrodollar system, started buying U.S. treasuries in lieu of gold. Now we're switching back that the other way around. That blue line there kind of indicating where we had to go with this $38 trillion in U.S. debt and countries around the world and companies suddenly saying, I had enough U.S. treasuries. Maybe I will buy some gold instead. Gold is trying to signal in my notebook along with the GDX miners, which alternative to gold, the new gold, we're in the Bitcoin hat. Look at this massive run here in the last week. Pull back to 108 and now back to 119. Little consolidation here would be nice as we go into all-time highs, I think, in October. Back to 124, 125. The chart is looking really nice, especially if we can hold this level here and go higher. Hard assets is the theme. And Bitcoin is a hard asset in terms of commodity. It has commodity-like volatility characteristics. Oil is the only commodity yet to get into bullish trend, but we're looking at natural gas, we're looking at silver, we're looking at copper and Bitcoin all breaking higher in this macro backdrop. Bullish commodities, bullish risk on beta plays for now until we're not. Tomorrow, I have a conservative take, though, on potentially longer term how this bubble is, particularly in the AI, NVIDIA, the semiconductor chips, is really getting kind of scary. You look at some metrics there. But for now, I kind of continue to be bullish and like these themes. Do your own research, just for entertainment purposes only. Hopefully you got something out of that, and we'll see you tomorrow. Cheers.